Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance, with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello and welcome to today's podcast. I'm Emma Walker. I'm a tax senior in Larking Gowen's private client team, and I am joined today by Nicola Furmston, who's a family solicitor from Kerseys Solicitors. Hi Nicola, how are you doing today?
Hi Emma, I'm doing very well, thank you.
Good.
It's a sunny day instead of a wet day, so it's all good.
Makes a change from the recent, doesn't it?
It certainly does.
Fantastic. So today we're going to be talking about the recent changes in the world of divorce, both from a tax perspective, and Nicola's going to be helping us out from the law perspective as well. So just to give you a bit of a headline here as to who's going to be affected by this, I went onto the Office for National Statistics. Their latest statistics, admittedly from 2021, show a 9.6% increase in divorces versus the previous year, which quoted to just over 113,000 divorces in 2021. So it's a lot of people that are affected by the changes that we're talking about today. So I think the first thing we wanted to have a quick chat about was the changes to do with no-fault divorces. So I think Nicola's going to...
Yes, I saw those statistics as well. I think some of that is probably to do with the pandemic, that there is an increasing trend in divorce because obviously during the pandemic it's more difficult for people to separate, and since the pandemic has gone, hopefully people have been able to action these things when they've needed to do so. There was a big change in the law to bring in no-fault divorce, which as divorce lawyers we were actually very pleased to see. We were really delighted for our clients. One of our important organisations for family lawyers is Resolution, and they worked absolutely tirelessly to bring in lobby the government for that new legislation, because family lawyers long felt that actually making very personal and upsetting allegations about people in order to achieve a divorce just started divorces off in the wrong way for people. Nobody likes to see horrible things written about them, whether they're true or not. The most common ground for divorce for the change in the law was to cite somebody else's unreasonable behaviour. And though we encouraged people to be as gentle as possible in what they were saying, it's always upsetting to see that kind of thing come through your letterbox. And how divorces start tends to be how they carry on, unfortunately. So Resolution, on behalf of family lawyers, lobbied the government very, very hard for many years to bring in no-fault divorce. The government had actually proposed to bring it in several decades ago, or the government at the time, and the legislation was all drafted, but they didn't bring it in, and decades went past. But thankfully, we did at last get no-fault divorce. And it's been a huge change for people because effectively now it's akin to terminating a legal contract, which is what it's always been. Marriage is a legal contract between parties, but the government is now treating it like the termination of a legal contract, which is a much better way to go about things if there has been marital breakdown. Effectively now what we're saying to the court is, we don't want to be together anymore, or I don't want to be with this person anymore. I would like that contract to be terminated. Of course, the government was alive to the fact that sometimes people are making decisions in very emotional circumstances and not always thinking as rationally as they might do. And so it was never going to be as easy as just filling in a form on a government website and lo and behold your divorce comes through. The government wanted to give people some time to think about their decision. Even once you've filled in that form, so you've put in your application for a divorce, There is what's called the 20-week holding off period, or alternatively cooling off period, when people have got to sit and wait effectively before they can take the next step. So the application is issued, it's sent out to the other person. There are now very few grounds for defending divorce. You used to be able to do it. It was quite difficult to do, but people could do it. The government didn't really want to allow people to do that anymore. So now there's very limited grounds for defending divorces. But the other party gets an opportunity to acknowledge receipt of that documentation. All the while, the 20-week holding period, which of course is nearly 6 months, is running. The government was really hoping that during that time, people would spend time sorting out their finances and their children. And then once the 20 weeks is up, people can apply for their conditional order. So if you're the applicant, you're the one that applies for it. But there can be a joint application on behalf of both parties actually for a divorce now, which is something new. We didn't used to have that. Very people are using that, I think, largely because traditionally one party has usually made the application. Technically, it is possible for the parties to do that together now. Anyway, regardless of who does it, after 20 weeks, that application is made for a conditional order. And the conditional order is something that used to exist under the old law as well, but it was called something different. It was called decree nisi. It was the point at which the judge looks at the divorce application to check that someone should have a certificate saying they can eventually get a divorce. So in the old law, there was effectively a sort of testing of the grounds that you were putting forward. But under the new law, that doesn't really exist. The judge is just checking the technicalities, really, of your divorce application, and then you will get notified that on a set date, the judge will pronounce your conditional order. It's a little bit of a sort of archaic process, really. That little bit of the process hasn't really changed greatly. But on that fixed date, the district judge reads a list of names out in the morning and says all these people can have a divorce. And that list of names is stuck up in the court office for a little while. And then you are notified with a certificate that you've got your conditional order. But that isn't the end of the matter. You have to wait another 6 weeks and 1 day, and then you can apply for your final order, which is your final certificate saying you're divorced. And again, that part of the procedure hasn't really changed from the old law, but the name has changed. So it used to be called a decree absolute, but now it's called a final order. And once you've got your final order, which you just have to click a button really now to get, you are divorced. And the court office actually, because under the new law, they are dealing with everything online, it's an algorithm. Sometimes we find we click that button, we actually have the final order back within 10 minutes, which is a huge change from previously. That really is the process now under the new law. And I think it's been really interesting to see how clients have reacted to that. Some are extremely pleased that this is all it's going to take and that they haven't got to embark upon a process of saying horrible things about the other person. And other people are really upset that they're not effectively going to get their opportunity to have their day in court, which I say in inverted commas because people didn't really get an actual day in court. But sometimes people wanted that cathartic bit of time where they wrote down what they saw as being the bad behaviour by the other party, and the other party would see that, and that fulfilled an emotional need in some people. While you might imagine that everybody would be delighted that it was so simple, actually it doesn't always quite meet people's emotional needs, I think. But on the whole, as family lawyers, we're delighted with it. We think it's much better for people. We think it's much more cost effective for people.
Sounds like it's quicker as well.
It's not quicker. It's not quicker, funnily enough, because you've got this statutory 20-week holding period. Now, in the past, we didn't have that. So we issued the divorce application, which at the time was called the petition. If the other party returned the form saying they were not going to defend the divorce quickly, we could apply for decree nisi, so the equivalent of the conditional order, immediately. So, yeah.
So despite the end being quicker, it's the start bit.
In fact, under the old law, if everything went swimmingly, you might expect to have a decree nisi in 8 weeks, and then your decree absolute could be 6 weeks and 1 day later. But under the new law, you've got to wait the statutory 20 weeks. And I have to say, I haven't really had any clients complain about that, because most people are going through a period of quite extreme transition. They've got issues to sort out over children, they've got issues to sort out over finances, and they sort of welcome that bit of cooling off. I think the government's idea was that people would reflect and think, oh no, I don't want to get divorced after all. That isn't right. That isn't what's happening. But I think people are glad of the breathing space to think about their finances, think about what's going to happen for their children, but know that the process has started and can't really be derailed because the blame side of it has been taken away. So it's not quicker, and there are pros and cons to that, I think.
Yeah.
But on the whole, I think most people are pretty glad that they can just start that divorce application without making the situation worse between them and the other party.
Certainly sounds like on the whole, it's going to certainly help take out some unnecessary emotional issues, like you say, pointing the blame at one person when these things unfortunately can sometimes happen. People fall out of love, but it's good that the government has allowed for that within the law now, without having to point the blame where it may be nobody.
Yeah, you're so right about that.
Brilliant. Well, from one really good change that's come in to another one, and I believe you said when we were first talking about this that it's certainly going to help a lot of your clients, and I know it's certainly going to help a lot of mine, is some changes in the capital gains tax legislation. So when you're going through a divorce, as Nicola mentioned, there can be a lot of discussions around finance and change in the ownership proportions of certain assets, some of which can lead to, or have led to in the past, capital gains tax being chargeable, which on top of everything else, such as what Nicola's been mentioning today, can just cause even more issues when people potentially don't have the cash sat there to pay this capital gains tax, what we call a dry tax charge, because nothing's being sold, so there's no actual cash coming in, but because of the change in the ownership, it was deemed to have been disposed. What was happening before was if an asset that was sitting at a market value when it was being transferred that was a lot higher than when it was first purchased by the spouses, and one was transferring their proportion to the other, if it didn't happen, if the disposal didn't happen in the tax year that they separated, they could quite potentially be liable to a capital gains tax charge, which could be quite expensive. And you'll appreciate if somebody perhaps decides they don't want to be with their partner in, say, the February of a year, and they've got lots to sort out between them, chances are it's probably not going to get sorted out in a month or so's time before the end of that tax year. So there was a lot of families that were splitting up, that were unfortunately being caught by these rules, and it made it quite difficult, Nicola, I'm sure you've probably seen in the past, to agree asset splits because of this tax charge.
It was quite a hidden tax. My perception is that a lot of people never give capital gains tax a thought. There's probably a lot of people who don't even know what it is. And it certainly never crosses their mind. They tend to think about income tax because that comes off their wages every month, or do their tax return, hand over a great lump sum. But capital gains tax is quite a hidden thing to most of the population. Often I find when I mention it to people, they're sort of like, oh, well, what's that? Really? What's that? Why have I got to pay that?
Absolutely.
It was quite an inequitable situation because when people separate, inevitably, unless they are really managing things very well between themselves, which is the exception rather than the rule, somebody has to move out. And in fact, in the past, 9% of the time, it was the husbands or the men who were moving out. They would do that because things were so difficult at home, children were suffering in a terrible atmosphere. So there were all good reasons for moving out, finding somewhere else to live. And then suddenly, of course, things took a long time to sort out, many years often, and there would be this capital gains tax charge, which, although it's usually divided equally between the parties, so whoever incurs it, it's divided between the parties equally. It was a shock to people, especially in circumstances in which people felt that actually by moving out, they've done the right thing by the whole family. I have to say, we were very glad to see this change, which obviously you're going to outline now for us, because it's going to make a huge difference to our clients.
Absolutely. And it's certainly, I think, going to help save a lot of tax, which is great to hear anyway. Just to give a bit of background, if you are married or you're in a civil partnership and you're together, if you pass ownership of assets such as properties between each other, that transaction for capital gains tax purposes is what we call a nil gain, nil loss. So essentially, partner A is giving the asset to partner B at their cost, if you like. So partner B is inheriting their base cost. So there's no capital gains tax to pay under normal circumstances. The old rules meant that the nil gain, nil loss treatment stopped at the end of the tax year that the spouses or civil partners decided that they were going to separate, which obviously didn't give people very long at all to get anything in order. The Office of Tax Simplification called for the extension of that nil gain, nil loss treatment. And they asked the government for a further 2 years. So you would get the tax year of separation plus a further 2 tax years to sort out your assets between the both of you without having this capital gains tax implication. The new rules that have been put in place actually go one step further, and they've given 3 years after the tax year of separation. So that's so much better than the previous rules. So the example I gave earlier would have only given you a couple of months, whereas you could almost have up to almost 4 years under the new rules. But it also does one step further as well, because the nil gain, nil loss treatment also applies to any transfer of assets that are between the spouses or civil partners has been as a result of a formal divorce agreement. Obviously, as Nicola has said, divorces can take an awful long time to go through all of the steps. And this new set of rules just allows that extra time and takes some of that stress away, because you're not time pressured if it's part of a formal divorce agreement, which I don't know about you, Nicola, but I think that's going to help so many people.
It certainly is, yeah. And I think it's just worth me clarifying what's meant by that. When parties sort their finances out, if there's a divorce or a dissolution of a civil partnership, we set out the agreement that they have reached in what's called a consent order. or it has a number of other names. It could be a financial remedy order, which is a settlement that's been determined by a judge. So if you can agree something, you'll have a consent order. If you can't agree and a judge decides, you'll have a financial remedy order, but they're essentially the same document. They set out formally the deal that you have breached. That document goes to the court. It can't go to the court until there's a conditional order. Another consequence of the change in the law is that if people are sure that they want to be divorced, we do encourage people to issue the divorce application sooner rather than later, so that they can get their conditional order sooner rather than later, which means in turn they can get their financial order, so their consent order or financial remedy order, at the earliest possible opportunity. And once that has been sealed by the court, it's binding on both parties, so neither party can go back on the deal. And that is what means that you are not going to have to pay that capital gains tax. So even if you had, for example, been separated for 6 years, you'd lived in separate properties, you would not have to pay capital gains tax because you'd got that consent order or financial remedy order. So it's very important to have that as part of your divorce. It's tempting to think, oh, well, I won't worry about that, especially if you think you haven't got too many assets. But that is what terminates your financial claims against the other party, and it terminates their financial claims against you. Just getting your final order of divorce won't do that. So it's a really important document for 2 reasons. Firstly, because of that, but secondly, because you won't have to pay that capital gains tax. It is very important to address the formalities of divorce and separation, rather than just drifting off and thinking, well, I'm just not going to live with that person anymore, it'll all be fine, because it probably won't be.
Absolutely. And just going back, Nicola, so what you said earlier about somebody moving out of the matrimonial home, as you say, typically the male, but could be either party. And like you say, in the past, that's led to the person who's moving out, especially with house prices going as they have been in the past few years, having quite a large capital gains tax liability that they weren't expecting. These new rules do cover the matrimonial home, as we would call it, the family home. Covers a couple of circumstances, including if one party retains an interest in that home, it does give them the option to claim what we call the principal private residence relief when that property is eventually sold, or even if one party transfers their interest or some of their interest in the matrimonial home to the other party, they're also given an entitlement to a percentage of proceeds sometimes on that eventual sale. Then they should be able to apply the same tax treatment to the eventual proceeds or the percentage of the proceeds when they actually receive it, when the property is actually sold. They should get the same tax treatment as if it had happened in the first instance. So it shouldn't put them, in theory, at any form of disadvantage in that respect for having moved out of that property.
Yeah, I would agree with you there. Again, I think that is quite a momentous change for people, because there are situations where it's just not possible for the party who's moved out to have their interest in the property released to them straight away. Usually that happens where there are minor children who need to continue to be housed, and there is no other way of providing that housing other than for the party who's looking after the children to stay in that property. But that leaves the other party in a difficult position because they're having to rehouse themselves, usually without very much money. So as you can imagine, it's not an agreement or a settlement that we particularly like people to have to enter into, but there are cases where there is no other way. What usually happens in those situations is the person who's moving out gets their interest in the property when the youngest child reaches the age of 18. Although there are other triggers, for example, if the person staying in the property remarries and sometimes if they cohabit, or if they would voluntarily leave the property or die. But 9 times out of 10, that party is out of their out of pocket, out of their interest until the youngest child is 18. And obviously, as you can imagine, over that period of time, house prices can go up exponentially. Usually, the person who has been forced into that position has by that time, sorted themselves out, perhaps met somebody else, perhaps bought another property, and it would come as quite a shock to people when we used to tell them that actually, eventually, when you get your money, you're going to have to account to the taxman for that and pay capital gains tax on it potentially, which is an enormous worry to people, especially since you can never know what's going to happen with capital gains tax rates at any given time. The government may choose to change them or change the rules. So we were telling people, okay, this might happen to you in 10 years' time when your youngest child is 18, but we can't actually tell you what the tax regime might be then.
Absolutely.
So, unfortunately, there you are. There's nothing we can do about that. So that was very, very difficult scenario for people to find themselves in. So I think it's, absolutely great that the government has made this change so that those people aren't disadvantaged.
Absolutely. And just whilst we're on tax, just some very brief other tax considerations from an income tax perspective you may just need to consider if you are going through a divorce. If, as part of the divorce proceedings, assets such as rental properties or shares, or even cash that's being held in an interest-bearing account has been moved over to yourself, you may need to consider whether or not you need to go into self-assessment and whether any income tax is payable on any of that income, especially now with the interest rates going up as well. It's probably not something that's been too much of a consideration in the past, but certainly more and more people will be caught out by tax on their savings income, but that is certainly something to just consider. And there are some quite tight registration deadlines for self-assessment as well that you need to watch out for.
Yeah, I think that's an interesting one as well. And what we often find is, and this happens particularly if parties have got a second property, it might be running as a buy-to-let. Issues can arise about how they've treated that income during the course of their marriage. My understanding is that people often don't realise that they must account to the taxman for income that's received buy-to-let properties. It's very easy to think, that can just all go in my pocket, but actually it can't. And sometimes how that has been dealt with between husband and wife or civil partners in terms of who's declaring that to the taxman and who's paying tax on it has not always been dealt with properly. So often what's happening is when people come along, we need to sort out their divorce settlements. We are referring them to people like you, Emma, at Larking Gowen, and saying, can you please have a look at what has been declared over the last few years and make any necessary changes or amend tax returns, which I believe is possible, in order to make sure everything has been properly accounted for. And so that gives people a foundation then for going forward for the future. I think we all sort of think of income tax as being, it comes off our salary, or
Absolutely.
and we forget about the other things that unfortunately also attract that income tax charge.
Absolutely. I mean, I will always call them accidental landlords, but this especially happens for those that have, like Nicola's just said, got a second property. Maybe they used to live in that as their main residence, and then they bought another property that they then moved into and decided, you know what, we're going to let out that first property. I think there's a big misconception about, well, that was my house, so I don't need to pay any tax on that. So I've seen it plenty of times myself. I'm sure, Nicola, you've probably seen it a few times.
Many times, and actually it crops up as well often with hobby businesses that people have got, which are quite common these days. I don't think it probably was as common years ago, but Now we can all be a sort of Etsy seller or Amazon seller. Quite a lot of people are running side hustles alongside their main jobs and don't always realise that actually those side hustles may have to be declared. I believe, and you can clarify this, Emma, that you can earn up to a certain amount from a side hustle and not declare it to the taxman, but after a while, if it goes above a certain amount, you do have to declare that. And again, often that's something that does come to light as a result of looking at finances on divorce, and we have to send people your way to get things sorted out properly, to provide a foundation for going forward.
Like Nicola said, you can earn up to £1,000 per tax year if that is your only trade. So if you're, I don't know, a sole trade decorator, for example, that's your sort of full-time job, if you like. And then, like Nicola says, perhaps you sell some crocheted items on Etsy or something like that. I suppose that was quite popular during the pandemic. Then you can't necessarily say that you can earn that £1,000 from the crochet business because you've already got another business. But if you are full-time employed, for example, and you sell your crocheted animals on Etsy, then yes, you can make that £1,000 of gross turnover without having to declare that to the taxman. But yeah, no, you're quite right. So many of these things do just unfortunately come out in the wash, and I suspect we will see more of that after having gone through the pandemic, when people had a bit more time on their hands, so they've picked up these hobby trades, as you say. So yeah, just things to think about as well, on top of all of the other bits and pieces alongside a divorce. And then finally, Nicola, I did just want to talk about, once everything is done and dusted from a legal standpoint on the divorces, just something to think about is updating your wills.
Yeah, very important actually, and so important that the court actually puts a note on the bottom of your final order telling you to have a think about your will, because if you have got a will from before your divorce and you have left a gift to your spouse in it, then that gift automatically lapses on divorce, which you might assume would be what people would want, but isn't necessarily. And when I say divorce, I'm also talking about dissolution of civil partnerships. So there are implications to getting that final order. It's an opportunity really to review your will, because you might also have made your spouse an executor to your will and not want your spouse to be an executor anymore. So it's a good point to review your will and decide what's going to happen for the future. You might think to yourself, oh, well, I'll just tear it up. And you could do that. But if you then die without a will, that will leave your estate to go under what's called the intestacy rules. They're the rules that govern who gets your property, assets, money if you die without a will. It's reasonably straightforward in that if you've got children, it goes to your children. If you haven't got children, it goes to your parents. If you haven't got parents, it goes to your siblings. It isn't necessarily the case that everybody wants that. There's lots of reasons why people might not want certain people in their family to inherit money or property. If you had a will that in fact left everything to your spouse, then you effectively don't have a will anymore if that gift has lapsed because you've got a final order. And then you would be subject to the intestacy rules, if you died. And you might have strong feelings about that. So it's really important to think about the future and what's going to happen should something untoward happen to you. What I would say, though, is if you continue beyond your divorce to own a property with your spouse and you are what's called a joint tenant, which has nothing to do with tenancies of property that you rent, it's an archaic landlord term. It means that if you die, your share in the property will automatically go to the other co-owner of the property, regardless of whether or not you're divorced. If you remain a joint tenant with an ex-spouse, then it's automatically going to go to them if you die, and vice versa. Now, it would be an unusual situation to remain a joint tenant. Usually these things are changed during the course of the divorce, but not exclusively. If you are a joint tenant, you can change to become what's called a tenant in common. Again, another rather archaic landlord term. But that means that you can then leave your share of the property to whoever you want in your will. So if you don't make a will, there's really no point in severing the joint tenancy and becoming a tenancy in common. So lots of people do it hand in hand together. But the upshot of it is that it's actually quite important to look at what's going to happen in the future if you die at that point. And I think the other thing that bears mention is lasting powers of attorney, what you enter into if you want somebody else to be able to assist you with your money, property, assets, if you become unable to deal with your own affairs. They're usually entered into people in the latter stages of life, so usually people sort of 70 and above are thinking about doing lasting powers of attorney in favour of perhaps a spouse or an adult child or somebody else they trust, a friend. But it's not unknown for younger people to have lasting powers of attorney, because if they've ever gone to see a solicitor to get a will, the solicitor may well have suggested they have one, and that's all very sensible. But it could be your spouse who is your ex-spouse who is your attorney under that lasting power of attorney. So if you have done a lasting power of attorney and you're now divorced from your spouse, that appointment of your spouse has lapsed. It lapses when that final order is made. You could have had a lasting power of attorney that has more than one attorney. And if you do, although the appointment of your spouse will have lapsed, the other attorney can still act. But if you didn't, if you just had a lasting power of attorney in favour of your spouse, then that has lapsed. So at that point, really, when you're doing your will, because you've got divorced, you will probably want to enter into a new lasting power of attorney. And we do recommend that people do them. You don't necessarily need to do them when you're young, but the important thing to remember is that if you don't have a lasting power of attorney and somebody has to take over your affairs, which could happen for many reasons, they will have to apply to the Court of Protection for a court order that says that they can deal with your finances. And that could take up to a year or more to obtain. So it can be difficult if you don't have a lasting power of attorney.
And I can imagine quite stressful as well, actually.
Yeah, I think very, very stressful, because I think, again, there's quite an assumption amongst the general population that, if your mother is elderly and suddenly unable to look after her financial affairs, you'll just be able to walk into the bank and say, I need to do this for mum because, and they'll say, you can't. We cannot take instructions from you. Where's your lasting power of attorney? And you say, I don't have it. Well, you have to apply to the court. And it's going to cost you more money. And it's going to take time. And in the meantime, you're not going to be able to deal with your mother's financial affairs. So that's another thing to bear in mind. If you're getting a divorce, you've got a lasting power of attorney in favour of your spouse, think about how that's going to affect you. Think about how any existing will is going to be affected, and what you need to do about that.
And even though you're potentially getting a solicitor such as yourself to do the lasting power of attorney to prepare it, that doesn't mean that you're then immediately giving up your ability to look after your own affairs.
No, not at all. Not at all. It doesn't mean that at all. There are various ways in which lasting powers of attorney can be phrased. It does not mean you're giving up your ability to look after your financial affairs. And many people enter into lasting powers of attorney long before they actually need them. But when the time comes, it can be extremely useful to actually be able to just step in immediately and, buy those things that are needed for your elderly mother using her bank account. But you're absolutely right, you're not giving up that right to control your own affairs just because you've entered into one.
Absolutely. That will probably put a lot of people's mind at ease as well to know a little bit about that. So that was really helpful. So I think we've come to the end of today's podcast. I'd just like to say a massive thank you to Nicola from Kerseys Solicitors for joining me today.
Thank you for inviting me.
I'm sure it's been really helpful for a lot of our listeners. I've been Emma from our private client group. If you've got any questions or need any assistance surrounding anything either myself or Nicola's mentioned today, you can visit either Larking Gowen's or Kerseys Solicitors websites, the links of which are both in the show notes. Thank you very much for listening.
Thank you, Emma.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.